Hello and welcome. Today, we're going to tear into the financials of Dr. Agarwal's eye hospitals. We're going to break down the story behind the numbers of this specialized healthcare company and really see what's making it tick. So, how do you spot a company that's really on the move? Well, let's start with what's happening right now. There's some very fresh news that puts this company right in the spotlight, and it gives us a perfect snapshot of a business that has some serious momentum. All right, first up, let's talk about that momentum and the recent events that have got everyone talking. To start, the company just dropped some excellent results for its March quarter. We're talking a whopping 23% jump in net profit compared to this time last year. I mean, a number like that isn't just good, it's a really strong signal that things are heating up. And get this, it's hot off the press. The board is getting together to approve a plan to raise 70 crores in new funding. But here's the kicker. The money's coming from the promoters themselves, the founders and the top execs. When the people running the show are putting more of their own cash in, well, that speaks volumes about the confidence they have in the future. Okay, so that's the recent buzz, which is pretty exciting, but who exactly is Dr. Agarwal's? Let's take a quick step back and get to know the company and what it's all about. At its heart, Dr. Agarwal's is a super specialized chain of eye hospitals. Think about it. Instead of trying to be everything to everyone in healthcare, they focus on one thing, eyes. And they do it all, cataracts, glaucoma, laser correction, you name it. They're a major player down in Tamil Nadu and also have a foothold in Rajasthan, which makes them a really strong regional force. And just so you have a number in your head, the whole company is currently valued at over 2,400 crores. Now, that puts it right in that interesting small to mid-cap zone. You know, the space where you can often find some serious growth potential. Okay, enough talk. Let's get into the hard numbers. This is where we see if the story holds up. And let me tell you, it tells a pretty clear story of consistent growth. Just look at this long-term trend for their annual sales. Yeah, there was a little dip back around 2021, but look at that rebound. They've more than doubled their revenue since 2019, climbing all the way to nearly 400 crores in the last full year. That is a heck of a comeback story. All right, before we dig into the really recent stuff, a quick primer on two key terms, OPM and NPM. Just think of OPM, operating profit margin, as how much money they make from their main job, the actual eye care. Then NPM, net profit margin, is what's left at the very, very end, the pure profit. Both are super important for checking a company's financial health. Now, this is where it gets really interesting. Look at this quarter-by-quarter breakdown. Their operating profit margins are consistently healthy, right? Always hanging around that 30% mark. But then, bam, look at that most recent quarter. A big leap in both sales and net profit. They're hitting new records. And this chart just puts a giant exclamation point on it. Year over year, sales are up a solid 17%. But look at the net profit, up 21%. When your profit is growing faster than your sales, that's the magic formula. It means they're getting more and more efficient at what they do. You know, when you see numbers like that, you're not the only one paying attention. The big money tends to follow. So let's see who's betting on this company, because the ownership can tell you a lot. And wow, check this out. Almost 72% of the entire company is held by the promoters. We're talking the founders, the management, the people who built this thing from the ground up. That is a massive amount of skin in the game. It means their interests are perfectly aligned with the company's success. And it's not just the insiders. You've also got respected institutional investors like the Malabar funds buying in. When these professional money managers put their cash to work here, it's like a stamp of approval. It suggests they see a compelling long-term story. Okay, let's bring it all home. We'll do a quick scorecard, look at the big strengths, and also touch on one potential flag that the analysis points out. First up, a huge positive is the field they're in. Specialized healthcare, especially eye care, is what you might call a futuristic sector. Why? Because with aging populations and, let's be honest, all of us staring at screens all day, the demand for what they do is only going up. That's a fantastic tailwind to have. Second, and we've already seen the proof, this isn't some one-hit wonder. The numbers show strong and consistent growth. It's not just a good story, it's a story that's backed up by real performance, both over the long haul and in the very latest results. And third, you have that powerful vote of confidence from the ownership structure. The insiders are heavily invested, and smart outside money from institutional funds is coming in too. That's a really solid foundation to see. So, great sector, fantastic growth, solid investors. It all sounds pretty perfect, right? Which, of course, leads to the natural question, is there a catch? And here it is. This is the big question mark. While the past and the present look fantastic, the analysis flags a lack of what it calls future visibility. In simple terms, that means the company isn't giving a lot of public guidance about what's next. We don't have a clear, detailed roadmap from them about their next big push for growth. And that really leaves us with the core challenge of looking at any company, doesn't it? You have a proven, successful track record right here in front of you, but the map for the road ahead is a little bit fuzzy. So the real question to think about is, how do you weigh that rock-solid past against a more uncertain future?